This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors. I want to talk a little bit about something that's very near and dear to my own heart, that being self-employment income. Us realtors we're private contractors, and so we're dealing with some issues.
We're dealing with some issues.
Right.
The first thing we want to do is look at the difference between a self-employed consultant or outside contractor and an employee.
Right.
Employee, you go, you rank and file, you walk into the office, you maybe punch a time card, and at the end of the day, you get a paycheck.
Right.
And on that paycheck, your federal withholding is taken out, FICA and Medicare is taken out. Your employer is responsible for providing a place where you work, providing the tools that you use, providing the insurance. However, an independent contractor, they are both the employee and the employer. Mm-hmm. They're responsible for what's called self-employment taxes, which is the FICA and Medicare. Right. Your employer will pay 7.65% with some stipulations. We'll just talk roundly right now. Right. And then you're required to pay the 7.65%. Together, that's 15.3%. As an independent contractor, your self-employment tax brings it together. You're responsible for 15.3% of your net income.
Right.
And then on top of that, you're not having an employer withhold on a paycheck. You are responsible to make estimated tax payments.
And you should make those every quarter.
You make those every quarter. So a lot of employers are wanting to have independent contractors versus employees. They're not required to cover insurance. They're not required to cover their share of the FICA. Right. But there's a laundry list of qualifications that you have to fill in order to be an independent contractor.
Right.
Someone who engages an independent contractor gets in trouble.
Right.
Because the IRS comes in and determines that what was an independent contractor is really an employee.
Yeah, and there's some very basic things that if you're doing these things, you're an employee.
If
you're punching a clock, first of all.
If you're punching a clock, if you have a conflict of interest if you go work for somebody else.
Right.
If it's really a 9 to 5 or an 8 to 5 job.
Right. If
the employer provides your tools, your place of work, benefits, you're an employee.
You're an employee.
At the end of the day, you're going to get a statement that says this is how much revenue you earned during the year.
Right.
And then it's incumbent on you to keep track of those expenses.
Right.
And that's where the rub is. When you're an independent contractor, you've got probably some transportation costs,
right.
Going to and from jobs, some licensing fees,
yep.
Materials,
mm-hmm.
And the list goes on and on and on.
Marketing, all of that stuff.
Marketing.
Yeah, all of that stuff gets, we have to build a list of expenses against the income so that our tax bill's not on.
It's fair.
It's fair, right. If you're an independent contractor and you don't, let's say, for instance, you forgot to send in your quarterly payments this year.
Okay.
What happens now?
You're going to have to make it up, and then you're probably going to be hit with a penalty.
And some interest.
Well, I'm glad you brought that up. Let's suppose that you're an independent contractor and all you are is a ski instructor, mm-hmm. and you make all your money between November and March.
Right.
And nothing else the other times of the year. You're not required to make an estimated tax payment when you're not working, and you're only required to make estimated tax payments based on your income. So let's suppose in the summer months you're just hanging out and
you're doing goose eggs. You're not
making
any money in.
very little.
Right.
Let's for example, in those summer months you're making $50. And in the winter months you're making $500.
Mm-hmm.
Your estimated tax payment should reflect the change in income. Mm-hmm. And if you only work in those winter months and you make those estimated tax payments, you annualize your income on your tax return so you're not subject to those penalties and interest.
This has been Las Vegas Real Estate Now. Thanks for listening, and remember to tune in every Saturday at 11 a.m. on 101.5 FM, 720 a.m. KDWN.